Hello students, hope you will like and understand the content of this video. If you have got any query, please send it through the comment box. If you like smart lectures, please subscribe, follow, like, comment and share our channel. Thank you very much. Suppose company issues 10,000 shares of rupees 10 each. The money was called in 4 installments, 3 plus 2 plus 3 plus 2. First installment is called share application, second installment is called share allotment, and third installment is called share first call. And fourth, this is the final installment, so the name of this installment will be share second and final call. There are 4 installments, so 8 journal entries will be passed. 1 receipt entry and 1 transfer entry for each and every installment. So let's start with share application. At the time of share application, first receipt, then transfer entry, and after that, for allotment, first call and second call, first transfer entry will be passed and then receipt entry will be passed. So bank account debit to share application account account debit to share capital account, and the amounts will be 10,000 into 3, 30,000 rupees for both of them. Then share allotment to share capital account, bank account debit to share allotment account, and the amounts for both of them will be 10,000 into 2, 20,000 rupees. Now this is the turn of first call. Share first call account debit to share capital account, then bank account debit to share first call account. Means first transfer entry, then receipt entry. And the amounts will be 10,000 into 3, 30,000 rupees for both of them. Now second call. Share second and final call account debit to share capital account, and then bank account debit to share second and final call account. And the amounts will be 10,000 into 2, 20,000 rupees. In this way, 8 journal entries have been passed. 2 journal entries for each installment. I repeat it, at the time of application, first receipt entry is passed, then transfer entry. And after that, for allotment, first call, second call, third call, fourth call, whatever it is, first transfer entry will be passed, then receipt entry will be passed. In every question, we have mentioned that 10,000 shares of rupees 10 have been issued and the money was called in 2 installments, 3 plus 7. And then for another example, 10,000 shares were issued for rupees 10 and the money was called in 3 installments, 3 plus 5 plus 2. It means the face value of the share is rupees 10 and we are getting 10 rupees for each and every share. It is called shares issued at par because the money was called is equal to face value of the shares. Face value of share means when we issue the share certificate to the public, the printed value on that share is rupees 10, means printed value on the face of share certificate is rupees 10. That's why it is called face value. So we are giving the certificate of rupees 10 and we are receiving money of rupees 10. So we can say the shares were issued at par.